Hey there, and welcome back to the channel. Today, we're diving into a lesser-known but powerful investment vehicle in France, the FCPR, or Fonds Commun de Placement à Risques. Now, don't let the long name scare you. It simply means Risk Investment Fund. But here's the kicker. It could be your gateway to private equity, startups, and high-growth opportunities that regular savings accounts or stock portfolios might miss entirely. So, what exactly is an FCPR? How does it work? Who is it for? And most importantly, is it worth your money or your risk? Stick around, because by the end of this video, you'll know exactly whether the FCPR belongs in your investment strategy. Let's break it all down, step by step. Alright, so let's start with the basics. An FCPR is a type of mutual fund in France, designed specifically to invest in unlisted companies, startups, or other so-called risky ventures. These are not your standard CAC 40 or S&P 500 giants. Instead, they're often small or mid-sized companies, not listed on the stock exchange, that are looking for funding to grow. FCPRs were created to channel investment into innovation and entrepreneurship. They allow everyday investors, like you and me, to pool money together and invest in high-potential companies without needing millions of euros or insider access. Think of it as joining a team of investors who back promising businesses in exchange for a slice of the future profits. Of course, the risk part is real. These companies can skyrocket or fail. That's why FCPRs are considered high-risk, high-reward investments. They are clearly designed for investing, not for saving. You're not earning a steady interest rate like with a livret A. Instead, you're putting money into businesses that may take several years to return anything at all, but if they do, the returns can be impressive. So, what exactly can you invest in with an FCPR? Unlike a PEA or CTO where you buy shares of listed companies, an FCPR is mostly about private equity. That means shares in unlisted companies. These could be French startups in tech, biotech, green energy, or manufacturing. Innovative SMEs, small and medium-sized enterprises seeking growth capital. Occasionally, parts of larger private groups or even venture capital projects. Now here's an example. Imagine Claire, a 38-year-old investor who wants to support French innovation while aiming for high long-term returns. She invests $10,000 in an FCPR that focuses on green tech. The fund uses her money, along with others, to finance 5 startups working on renewable energy solutions. If even one of these startups becomes successful, Claire could see a significant return in 7 to 10 years. It's important to note, FCPRs are not liquid. You can't just sell your shares the next day like on the stock market. It's more like planting a tree. You wait for it to grow. So why would anyone choose an FCPR over more familiar investments like a PEA or assurance vie? First, the potential for high returns. Since you're investing in companies early on, before they go public or become profitable, the upside can be huge, sometimes 2x, 5x, or even 10x your initial investment. Second, there are significant tax advantages, especially if your FCPR meets certain legal requirements. For instance, many FCPRs offer exemptions from income tax on capital gains as long as you keep your investment for at least 5 years. That's right, your gains could be tax-free, although social contributions, 17.2%, still apply. Third, portfolio diversification. If your current investments are mostly in listed companies, real estate, or savings accounts, an FCPR gives you exposure to a completely different part of the economy, the private entrepreneurial sector. And finally, social impact. By investing in FCPRs, you're helping to fund innovation, create jobs, and support sectors like green energy, medtech, or local manufacturing. You're not just growing your wealth, you're backing the future. But of course, no investment is perfect. First and foremost, Risk. These are not safe investments. Companies in the fund could go bankrupt, fail to grow, or simply underperform. You could lose part or all of your initial investment. Second, illiquidity. Unlike a livret A or a stock in your CTO, you can't withdraw your money anytime. Most FCPRs lock in your funds for 5 to 10 years, depending on the fund's structure, so you need to be comfortable with that timeline. Third, while there are tax advantages, they only apply if the FCPR meets certain conditions. Not all of them do. And even with exemptions, you'll still pay social contributions on your gains. And finally, complexity. FCPRs are not always easy to understand. You'll want to carefully read the fund's prospectus, check the management fees, and evaluate the companies it invests in. Ideally, you should only invest if you understand the risks or seek help from a financial advisor. Now let's say you're interested. How do you actually invest in an FCPR? It's not something you can just click on in your online banking app. Start by choosing a provider. Many assurance VI contracts, wealth management firms, or private banks offer access to FCPRs. Some online brokers also list FCPR options. Provide the required documents. Usually that means a valid ID, proof of address, and your French tax number. Choose your fund. There are FCPRs that focus on tech, green energy, European startups, or even humanitarian projects. Make your initial investment. This can vary, but expect minimums starting at $1,000 to $5,000, depending on the fund. Wait for confirmation. Once subscribed, the fund will inform you of the investment schedule. You won't see daily price updates like with stocks, just periodic reports. Can you take your money out whenever you want? Unfortunately, no. FCPRs typically have a fixed lifespan, often 7 to 10 years. During that time, you're committed. Some funds might allow early exit under exceptional circumstances, but you may face penalties or lose your tax benefits. Once the fund matures, the manager liquidates the assets and distributes any profits back to investors. It's only then that you see your final return. So again, this is not a short-term play, it's a long-term commitment. Now let's talk taxes. If your FCPR meets specific legal criteria, like being invested at least 50% in eligible unlisted companies, then any capital gains are exempt from income tax, provided you hold it for at least 5 years. However, you will still owe social contributions on any profits, which is currently 17.2%. If you sell or redeem your units before the 5-year period, the gains are taxed at the standard 30% flat tax, just like in a CTO, that's 12.8% income tax plus 17.2% in social charges. So the tax benefits are real, but you have to respect the rules and the timeline to unlock them. How does the FCPR stack up against other popular options? Compared to a livret A or PEL, the FCPR offers much higher potential returns, but without any guarantee or liquidity. Compared to a PEA, the FCPR gives you access to unlisted companies, which you can't get through a PEA, but the PA is more flexible and tax efficient for listed stocks. Compared to Assurance V, FCPRs can sometimes be hosted inside these contracts, giving you even more tax advantages, especially for inheritance planning. And if you already use a PR, Plan Épargne Retraite, some providers offer FCPR exposure inside it as well, for those who want higher returns for retirement and can stomach the risk. Final thoughts. Please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. So, is an FCPR right for you? If you're a beginner investor who wants guaranteed returns, liquidity, or low risk, then honestly, no, this probably isn't your product. But if you're looking to diversify your portfolio, support innovative businesses, and you're willing to lock your money away for 5 to 10 years in hopes of high potential gains, then yes, an FCPR could be an excellent addition to your financial strategy. Just make sure you do your homework, read the fine print, and don't invest more than you're willing to risk. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the bell so you don't miss the next one. And drop a comment below. Would you ever invest in an FCPR? Why or why not? See you in the next video.